Well, Mark, welcome back. How are you? Come on, Mark. All right, then let's start. Let's see. Alon, Don, Ed, Mario, Ted, can you guys hear me? Oh, good. All right, Ted, thank you. Don, thank you. Okay, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. For those of you on the YouTube, welcome. This is my brief bio. For those of you who are new, so welcome. Thank you for joining. If you like the content, do me a favor, please subscribe to our channel and hit the like button. That's very important. We appreciate that. If you're new, again, Yellow Tunnel, Tradespoon, the difference is that we do both. We do analytics, right, based on AI. We generate signals. Our models generate signals, and then Keith and I trade these signals on a daily basis. Ross, welcome back. Disclosures are very important. If you're new to trading stock or options, or this is the first time you see the slide, disclosure slide, I encourage you to visit the link, optionscreening.com, to understand the risk associated with trading stock or options, and you can always pause the screen if you need more time to read the disclosures. Right, trading psychology is important, right? At this point, I think reading charts is just as important as predicting your own behavior, right? What will you do if the market goes up 5%? What will you do if the market goes down 5%? How will you feel? How will you react? So learning about yourself is extremely important, especially if you haven't lived through 10%, 20%, 30% corrections, right? If you just start trading. I know a lot of you have been with us for many years, so you guys have been through this, but some of you are new. So it's important to kind of predict your own behavior, right? And the idea of the economy of control is that there's certain things that you don't have control over, right? Tariffs, you don't have control over the percentage, the timing, or the impact. Very hard to predict. I would say impossible to predict. You can get 10 best economists in the room and they'll give you different opinions. So as an average retail trader, I would not try to determine that because that's outside of your control. But what within your control is, how much cash you have in your account, number of position, and position size, right? So positive and negative visualizations are extremely important, so you can determine that position size. You want to avoid flight or fight response, right? It's all about game theory, right? What does most market participants think about CPI data today, right? And compounding investment, right? Have reasonable goals and they compound over time. So portfolio 30% in cash. I would, again, if you think 10% we're in correction, right, and it's a normal healthy correction of 10 to 20%, this is the time you start deploying the cash, right? You had 30% cash, now maybe it can drop to 20%, right, or 10%. Obviously, if you think we're in recession and we're going to have more than 20% pullback, this is the time you start raising cash. So it just depends on your outlook on the market. Does anyone know whether we will or will not hit the recession? I would say probably no. At least right now, consensus economy is cooling, right? Employment market is cooling, the retail data is cooling, airlines data is cooling, home builder, but not to a point where we are in recession. But as data comes in, these opinions will shift. And look at the portfolio drawdown, right? Number of position and position size. Usually, some of my rules, Bill, no problem. Some of the rules that I like to cover, again, 4 positions, no more than 2.5% account value. If you're new to trading, especially if you haven't been through 10, 20%, 30% corrections, I think this is the most important rule, right? 4 positions, 2.5%. At this point, if you had 4 bullish positions and each of them you're down more than 2.5%, you would be out. Why? Because nobody can tell you with any certainty whether we reach the bottom or not, right? That is something that I can say with a very high certainty that nobody can give you. I mean, they can give you that opinion, but that's just a flip of a coin, right? At this point, there is not enough data to determine whether we reach the bottom or not. So if you're down 4 positions, you're down 2.5%, okay, you're out, and then you wait. Maybe you wait for bottoming process to kind of confirm that there is no more downward pressure in the market. When all the bears kind of, when everybody stops selling, that's okay. Then that's usually the bottom. So wait for 2 to 3 days to confirm trend change. This is a critical rule, right? We haven't seen 2 to 3 days of higher highs, higher lows since end of February, right? So until you get 2 to 3 days of positive reaction where you have higher highs, higher lows, the trend hasn't changed. The trend is down, right? We're down 10% on value stocks, on S&P. I think we're down close to 15% on the QQQ and high beta stocks. Until we have that, you can't really talk about bottoming process, right? Allow more time, right? If you're bullish and you think market is oversold, I would go into May, right, or June, right? I wouldn't trade March or April because it's going to be volatile, and VIX is going to, jump from 20 to 30 to 40 to 20 back and forth. So allow more time. Obviously, allow more space, right? If you think that we reached, 200-day moving average, right, will hold. Obviously, it didn't. So then you give yourself more room. Look for ABC pattern. We're still trading in wave A. We haven't really had a wave B. It was just kind of down, down, down in one straight line. So today, we have a rebound. We'll see if it holds. So maybe that's the B pattern. Wait till end of day break trades, right? You have these intraday, news alerts, right? 20% tariffs on Canada, 50% tariffs, visa for all the Canadian citizens over 30 days in the United States. So these news obviously go back and forth throughout the day. End of day is when all the institutions kind of digest that news and start trading. So in the down market, it's very important, right? Don't react to these, at least from my experience, don't react to intraday swings. Unless you're a day trader. But if you're not a day trader, you're making a decision, you probably want to wait till end of day. Do not sell naked options, right? A lot of people say, okay, sell premium, sell naked puts, sell naked calls. I wouldn't do it. I would do the spreads because you don't know where the bottom is. So again, do not call the bottom. Keep where earnings, do not chase the trades, avoid revenge trading, avoid angry, lonely trading. Look for signs of bottoming process, right? This is the most important. Review how often you review account value. Look at the portfolio beta, right? If market is down 1% and your portfolio is down 2%, that means you have too much exposure to high beta stocks. You got to trim your high beta stocks. The stock market is down 1%. Ideally, you want to be down 0.5%, especially if you're new. So if you see that market is down 1% S&P or QQQ, and your portfolio is down 2%, that means you have too many high-flying stocks, right? Palantir, Nvidia's, Bitcoin. So it's time to trim those exposure. So those are very important rules. I was doing kind of more researching. We talked about this trend, right? This is an interesting chart going back to when we reached the bottom, right? In 22, in 22 correction or recession. And since then, kind of a pretty, we've touched this once in October of 23, we touched it April of 24, we touched it in July 24. Now it looks like we're broke through that line. right? We broke through this line. We are rebounding back to, I think we were at 480, right? So 480 is an important overhead resistance. It kind of, at least for now, is not able to break through this, but this line is important, right? If bulls can get above, I mean 500, I would say. I mean bulls need to get above 500 to say that the bottoming process is in place, and you know we're close to the bottom. But as long as we're below 500, below this breakout from July highs, I think it's a pattern of lower highs and lower lows, meaning sell into the rallies, buy in the dips, right? So that would be an important kind of analysis, right? So how I would look at it, right? As long as we're below this line, you can expect the market to, you know, continue making highs. So I would be careful, and you know, definitely as we approach in 500, I would consider selling. What else was interesting? So that's bearish. I did look at percent of stocks above 50-day moving average. 25 lows, 24 lows, not that far away from 23 or 22 lows, right? So number of stocks above 50-day moving average, we're getting to the extreme situations. Some people like 20-day moving average, right? Number of stocks above 20-day moving average. You can see we're at 2024 low, 2023 lows, not that far away from 2022 lows. So those are all good signs of kind of exhaustion, right? That the sell-off probably reached, at least the first phase of sell-off is reaching kind of overdone, right? You can see in market sentiment, you can see in retail, bulls, bear, percentage of bulls and bears. They're all in these extreme multi-year lows, right? Saying that the market is extremely oversold, doesn't matter what you look at it, market is extremely oversold and needs to bounce back, right? So now the question, can it bounce back, and you know, can it hold us, right? So we did have a CPI data better than expected. But again, I kind of, in my journal, I'm writing down, well, has anything changed? Nothing has changed, right? This is a CPI data from February. Most of these tariffs didn't take into effect. A lot of people concerned about tomorrow's PPI data, see if it's any better. So for now, this is positive sign, right? Day one, day two. I mean, if we can break above 485 or even 490, that would be very, I mean, at least above 200-day moving average, right? If we can get above 495, again, I said 500, that would be a win for the bulls. But as long as we're below 200-day moving average, as long as we're below this breakout from July, it's still a very weak price pattern. So that would be my thought process, right? So you would sell at 200-day moving average, right? And I mean, when you do have these sharp sell-offs on above average volume, you know, maybe it's time to start buying. I mean, the next level, if we have a reversal and we break through these lows, right, then the next level is 450, right? We really don't have any support till 450, right? So that's another 30 points drop, right? 30 points drop. I mean, any bad news, let's say PPI tomorrow is much harder than expected, because you know companies are for uncertainty about the tariffs, and producer price indexes start going up. Okay, then that will feed into the narrative of recession, right? And you know, meanwhile, semiconductors are up 3%, QQQ up 1.5%. Another observation is that we're back to normal correlation, where people are selling, you know, treasuries and they're buying stocks, right? So nobody is concerned about inflation, people are concerned about recession. And during recession, or fears of recession, you know, when people are afraid of recession, the correlation, the historical correlation is that, you know, bonds versus equity, right? So if you're buying stocks, you're selling bonds, and vice versa. So I would look 10 years into this magic 4.3%, right? If you go back to these long-term charts, right, 4.3 was better start removing some of these things. Yeah, so 4.3% was the highs from the, again, sell-off of 2022. All right, so this is where we reached the pullback in 22 recession, right? And we got it to 4.3. We broke above that in November of 23, and now we kind of pinned to this number, 4.3. So I would watch that. But yields are stable, they're down, that's bullish for the market. Dollar is down, that's bullish for the market. Bitcoin is not rallying, that's bearish for the market. And one chart that kind of caught my attention is this chart, right? You know, somebody said that, you know, if we are in recession, then we could drop to 480, right? There's really, if you look at the monthly chart, like long-term chart, we basically gave up half of the gains since peak of last bull market back in 22, right before the interest rates rally. That was market reached 480 in January of 22, right before interest rates started rising. Then it broke through that level in beginning of 24. So in the past 12 months, we gave up half of the gains. So 545, 530. And we see positioning at 530, 545. If that position doesn't hold, let's say after March expiration on April 2nd, you know, this is when the tariffs against European Union and Trump doesn't back off, right? Or Fed does not lower interest rates, right? Two events. Fed needs to start lowering interest rates, or Trump administration has to back off from this tip for tariffs. If those things do not happen, right, and you know, or you know, we impose 50% tariffs on Canadian goods, and the 530 level doesn't hold, then you could not rule out that we're not going to reach 480, which is a pretty sharp drop, right? That's a pretty sharp drop. So bottom line, since you don't know, you need to, you know, the way I'm thinking about this, I need to be able to buy at 480, right? I need to buy at 520, right? And if I'm buying at 565, so I need cash, right? So if you have 30% cash, I would say break it into 3 buckets. Buy at 560 because market is overbought. It gave up half of its gains. So any positive news on the market is going to rally. But if it drops below 530, you know, you do need to have ammunition, right? You need to have cash to buy at 480 because I think that would be a very good opportunity to buy, right? That would be what I think 20% correction. I think it's exactly 20 close. Yeah, 20% correction. So that's something to, and this is monthly chart. So those are some of the what if scenarios, right? What if there's a lot of bad news? Then, you know, we could drop 20%. What if if the bad news are over? Okay, then we're down 10%, right? So that would be my thought process. Meanwhile, small caps up 1%, semis are up 4. QQQ got above 480. So short term, I would look at the positioning. Oh, Mark, Cherry Blossom, Kajeri Muffin, Letter Trades, Russer, everybody on Discord, all my favorite people. Excellent. All right, thank you for participating. I really appreciate that. Again, looking at the spiders, most of the concentration is in March expiration. And again, just like we talked about February expiration, the reason we have a sharp pullback, it's not like there's any new information. The economy was cooling before end of last year, right? There's no new information, and probability of Trump winning started increasing last year. So there's really no new information whatsoever, right? The only thing that has changed is the positioning, right? The reason we didn't sell off in, you know, December or January is because of the, you know, bullish time of the year, people, you know, repositioning, so that didn't happen. But February, after the expiration, just like people are drawing parallels between, you know, COVID, it's the same thing happened, right? February, there was, March expiration. Of a February expiration, market starts selling off. right? And it reached the bottom after March expiration, right? Which is coming up, you know, on March 21st, right? We are what? Well, yeah, so not this Friday, next Friday. So I would look at March expiration and I would look at April expiration. I don't think anything is going to change in the next 2 weeks, basically. Right? We could reach 530, right? In terms of gamma position, we talked about 530 is an important level, right? 550. Very high position right now, it's 550 strike, and very high position at 530. And again, there's nothing below that. So 530, 550 has to hold, right? Otherwise, we have a big sharp bell, just like 580, right? I was talking about 580 has to hold. Otherwise, you have a sharp pullback. And then same thing, if the 550 doesn't hold, you're going to have a sharp pullback to 530. But those are your levels of overhead resistance, right? So we are, you know, next level is 565, right? So 565 is big overhead resistance in terms of gamma exposure, right? This is your resistance. And 580 is a bigger resistance. Resistance too. Support, you know, I mean, we reached 555, so pretty large gamma at 550 and then 530. So those are the levels where I would buy and sell, right? Especially if you're an aggressive short-term trader. And just keep in mind that once March, we have what, 10 billion, 11 billion, 10 and a half. 10.5 billion, a lot more positioning in March. So those people are heavily, you know, buying puts, right? Selling calls, positioning. But in April, I mean, still not bad. It's almost $4 billion. I mean, $3 billion, but not a lot of positioning, right? So you can expect that, you know, between now and next expiration, right? You know, between March and April expiration, by end of March, beginning of April, we could be at 530 very quickly. I mean, we could be at 580 very quickly. So at 580, I would consider selling. At 530, I would consider buying. And the good strategies we start releasing on bar chart is this protection strategy, right? Market neutral strategy. Merit put, right? This is my favorite strategy. But this requires a large account, right? Because, you know, whatever you're buying, let's say spiders or NVIDIA, right? I mean, NVIDIA, where NVIDIA is going is where the market is going. So NVIDIA maybe easier. Right? You basically say, Vlad, okay, I don't know where the bottom is, but I want to take 10% of my cash and, or 20% of my cash and start deploying. Then, you know, I would go into May, right? And let's say 116 strike, right? So let's see. Merit put, let's say 110, right? You want to buy strike 110. What does it mean? Is that the most you can lose in this trade here is $1,000, right? You know, because you're buying 110 strike, you can't really go below that. So downside is 7% here. In the money probability 51%, and you know, maximum loss is $1,000 and infinite gains, right? Because you're buying, what are you buying? 110 put for $10.50. All right, so you're limiting your downside to 16. What am I buying? Put 110. 16. Let me look at the price 110. So NVIDIA 116. So your break even is 119.26, right? It's a strike, but what is your maximum loss? Maximum loss is, so you're buying 110 put, so $16. Debit 920. So NVIDIA is at 116, you're $6. So let's draw this on. Lost calculations. That doesn't sound good. Okay, so I don't think this is correct, but you know, you're protected till 110, right? Which is you can lose $6, right? And then you're paying $10.50. So so the worst case scenario at 110 put, if it drops and stays at 110 put, you lost $6 on the stock, right? And $10 on the premium, so $1,600. But your downside is, you know, I mean, it's a little bit more, right, in probability of success. So this is basically limits your losses, but there's unlimited gains. I think that's the point I'm trying to make, that this is limited losses. You know exactly what you're going to lose, right? You're going to lose, you know, $6 on the stock and the insurance, $10. Usually what I do, I buy put spread to instead of spending $10, maybe spend $5 by doing, let's say, 110, 100 put spread, right? So that's something to consider. You can look at the volatility, right? Volatility is average right now. And trend is obviously short-term, mid-term, long-term. This is based on proprietary bar chart. You know, I mean, traditional technical analysis, obviously, it's all down, 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 strong sell. But, you know, if you're contrarian, then this is something you can, you know, we're 50% down from April 1924. Okay. And you can also look at the expected move, right? When you look at the strike price selection, March by March expiration, looks like 100 is your support, right? So that's where I would get, you know, to 100. You know, if you buy 110 put, maybe sell 100 or 95 strike, because based on the current volatility, that's where the bottom is. So mirrored puts are very popular. Protective collars, kind of the same idea. Right, you can say, okay, I'm going to buy 115 put or 110 put and sell 115 call. Let's do 125 call. 120. Where's overhead resistance on NVIDIA? Let's look at NVIDIA. So we're at 115. Let's say you say, okay, well, 130. What's that? 130. Okay, so basically selling 130 call, buy 110 put, right? And the buying the stock, right? So you're limiting, you know, same idea at 110. So your loss is if it drops to 110, NVIDIA is 108. Oh, no, sorry, NVIDIA is 160. NVIDIA is 108. Here's the last prices wrong. It's interesting. Okay, so in this example, obviously you don't have unlimited gains, right? The difference between protective collar or mirrored put is that you don't have unlimited gains, but you do have, probability of profit 43%, and you have loss of $800 and gains of $1,600. We need to verify this number. So is this 1,600 correct? Well, the price is incorrect. It should be 115. But okay, but you get the point, right? In terms of profit and loss, how much theta you have, time decay in theta, right? And then same thing with delta. Any questions? So these are probably my favorite strategies, right? And usually I leg into a color, right? Right now, if the market is oversold, I would buy stock and put, and then if the market rallies, I would sell the call, right? So now I'm kind of in this zone, right, where I can trade between certain levels, right? The idea is to find the gamma find where there is positioning. Let's say, okay, I see obviously 110, very large positioning. I see overhead resistance at 120, 130. So this is, as we approach 120, 130, I'm selling the calls, right? I'm selling the calls at 120 or 130, right? And and then I'm buying 110 put, right? So as it approaches 130, you sell those calls, and you can also buy a put as it rallies. But usually I buy married put, right? I buy married put and then sell a calls. So this is something to consider as another strategy. Fred, good morning. How are you? So, but this requires buying 100 shares of NVIDIA, right? And 100 shares of NVIDIA, you have to spend, $11,000. So if it's a smaller portfolio, then, it's vertical spreads, right? Same thing, if you're bullish and you think NVIDIA is oversold, and let's say, right, let's say you say, okay, 110 strikes, pretty large positioning. Maybe this at least will hold till at least till next March. I mean, till March expiration, till the end of next week, maybe the 110 level will hold. Then you buy, 110, 120 call spread, because you see that that's kind of where, this is support, right? And this is resistance based on how people are positioned, right? So somewhere between 110 and 120. So then you would go into here, go into vertical spreads. So, okay, let's say you're bullish because you think the momentum will continue. You get 110 strike, 110, 120. See what's the probabilities. I mean, they're all kind of 40% probability. So here's the debit. This is correct. Maximum loss is $550. That's the how much you're paying for the debit, and then it's this is 110, 125. Sorry, this is 110, 125. And then your maximum gain is $950. Again, you can look at the theta decay, and you can look at the delta. For each, 22%, right? For each dollar, it'll move 20 cents, the spread. And you can look at the expected move. Right? You can see kind of by April, overhead resistance is 122. So it makes sense, and support is at 100. So based on the current volatility, one standard deviation between now and April, it will trade between, somewhere between 100 and 122. Right? So that can also help you with strike price selection. Any questions on these strategies? Well, a lot of people. All right. Meanwhile, let's see. Strong rebound in NVIDIA. We're actually above this breakdown level back in February low, January low, or fighting for that level. So that's positive. For NVIDIA, looks like catching a bit. Bitcoin not rallying. Crude oil is not. How's Broadcom doing? Broadcom kind of following the suit. Okay, so that's good. Bitcoin is not participating. That's not good. But it's above 200-day moving average. It's doing better than QQQs in general. So it's good being catch up. Let's see. 10-year yield pegged to 4.3%, kind of fluctuating higher or low. Dollar not moving. Value turn negative. That's not good. So value stocks actually reversing. That's another bearish argument, is the value stocks just reached 200-day moving average. They haven't even broke through 2025 lows, right? Where QQQ is a lot lower than 2025 lows, right? So that's putting additional pressure. The high yield, like yesterday I noticed high yield is breaking down, right? The widening of the treasuries versus junk bonds. So that's not good, but kind of exhaustive. Volume yesterday was, kind of similar to the volume back in December. So that could be also exhaustive. But that, I think, until value starts, sell off, at least 10%, close, right? 6%. Okay. So until they sell off at least 10%, that could put more pressure, right? And this is why stocks above 200-day moving average are still not at all-time lows, because outside of beta, value stocks held up pretty well, but now they're pushing the stock market lower. And you can see we reached the 480 strikes, and we'll see. I would wait till end of day, but for now it's being rejected. Let's see how much time we have. 15 minutes. I mean, it's all about closing bell, but for now we're kind of at support from yesterday's high. So we broke through yesterday's high, got rejected by, let's look at 1 hour chart. Yeah. So we got rejected by March 7th low, and we're still above yesterday's high. or at yesterday's high. Okay. Any questions? And where's the QQQ position in 480? Okay, so we have 480. Not fine. I mean, not huge, but meaningful enough. Let's see spiders. We'll get to 560. So 560 has the highest position. So yeah, it has a hard time breaking through 560, 565. Okay. Questions? Just looking at my account. So 520. Let's see spiders. All right. Any questions? Why silver is pulling back? I mean, dollar is down and interest rate is down, so that caused silver to rally. I mean, it's not pulling back, but it's overbought, right? It went from 28 to 30, right? $2, which is what, 8-9% in straight line. So there's overhead resistance. I mean, lower yield and lower dollar has been beneficial for silver. Gold is also kind of recovering, right? But you know, more of a consolidation phase. It's went in a straight line in 25. So gold and silver needs to some time to digest. All right. Any other questions? All right. So those are some of the ideas. Let's. I mean, stock forecast toolbox. I mean, turning pretty negative, right? It doesn't see any bounce until we have at least 2 to 3 higher highs, higher lows. It shows a very strong momentum to the downside again, based on close. Some of the values we talked about. I mean, I think this is excessive. I don't think. I mean, unless there's more negative news, I don't think we're gonna get to 500. But 520, 530 is reasonable. So for now, it's just a straight shot line to the downside. In terms of some of the trades, so I did close General Electric yesterday. Let's look at some of the positions. So Amazon, I did, market is overbought, so I did buy Amazon, kind of pulling back. But it hasn't made new lows, at least in 3 days. So we'll see where we're going to close. But it looks like it's getting more stable, at least doing better than QQQ. And Broadcom is a new position. So far, it's doing well, right? We're back to 200. What is it trading at? Let's try. So Broadcom is 420. I mean, it is up 20%, right? It does look stronger than most of the stocks. I'm inclined to buy that QQQ put spread that I missed. Let's see. Let's look at QQQ put spreads. Okay, so let's do vertical spreads. Their put spreads. Let's go to April. Okay, so 480, leg 2, 480. Leg 1. Not spiders. Okay, we can do spiders. Actually, spiders are weaker, so it makes sense to do spiders. So what is the strike? 5-6 strike. So we did 550, right? It's 550. So 550, let's look at the profit probability. 550, 547. April 17, 550, 545. So maximum profit $3.50, $1.43, 35% probability. 550 strike. All right, so let's see. 550 strike. So maximum profit would be at 547. No, that's sorry. 550, 545. Let's see, 550, 540. Let's look at 550, 540. So this is 550, 545. Vertical is going to April. $5 spread. $10 spread. $10 spread. It's going to April 555. So So 550 spread is $2.86. So if the 550 level does not hold, right, then the next level would be 540. Right, we're talking about 537. So 550, 540 put, expires in April, buy it for $2.75.80. Since I don't have any bearish positions, it makes sense to put on a bearish position. Okay. Okay, so that would be my hedge. So I have Amazon, I have a Broadcom. This is not recovering. Capital One Financial, I was looking to see if there's any bottom. I mean, it has bounced back off 200-day moving average. I looked, I think, at weekly chart yesterday. You know, if it makes new lows, then I would get out of the trade. So that's Capital One Financial, GE, and Morgan Stanley. I mean, GE has been a stronger stock, but it's facing right at the overhead resistance at 183, and Morgan Stanley is, I mean, bounce back. I would, you know, this is again 2022 highs. We're right at the bottom, so we'll see if that level holds. For now, I'm holding unless that level is broken. And those are all my positions. All right, that's all I have for today. Thank you very much. I will see you guys at the closing bell. Thank you very much on the Discord and on the, see you tomorrow on Discord. Well, March, you're good enough in letter trades, Russell. Thank you. And then on YouTube, please hit the like button, subscribe, share it with your friends and enemies, and I will see you at the closing bell. Thank you.